Let's be real. If you've ever stared at a screen full of stock tickers, feeling completely overwhelmed by all the market chatter, you know how tough it is to find the real opportunities. Well, in this explainer, we're going to build a systematic tool, a blueprint really, to cut through all that chaos and zero in on the high-potential stocks that are actually making a move. So, here's our game plan. First, we'll tackle that huge problem of market noise. Then, we'll dive into why volume is our secret weapon. After that, we're going to build our momentum scanner piece by piece. We'll learn how to take that list and actually analyze it. And then, we'll wrap it all up into a daily workflow. Ready? Let's get into it.
All right, first things first. Let's talk about the challenge that every single one of us faces. I don't care who you are, information overload. It is the classic, age-old problem of finding the signal in a whole lot of noise.
I mean, this is the big question, isn't it? The market is just this vast, endless ocean, and all we're trying to do is find a few specific fish. If you don't have a system, it's just so easy to get completely lost out there.
This slide really puts that challenge into perspective. Look at this. On one side, you've got thousands of stocks, and on the other, the simple reality that any one of us can only really analyze a small handful of them each day. That gap? That's exactly why a funnel isn't just a nice-to-have, it's absolutely essential. We need a system that can automatically do the sifting for us.
So how do we build that funnel? Well, the secret is all about following the money. And in the stock market, money leaves a very clear trail. It leaves footprints in the form of price and volume. And when you learn to read those two things together, you have the ultimate confirmation tool.
We're going to be focusing on something called price action. And look, it's not as complex as it sounds. It just means we're stripping away all the fancy, complicated indicators and getting back to the two most fundamental things. What is the price doing and how many people are involved? It is literally the purest signal you can possibly get from the market.
But here's the thing, not all volume is created equal. We need to know what's significant. So first, we need a baseline. We do this with a simple 20-day moving average on our volume chart. Just think of that line as the normal level of activity. So any day the volume bar shoots up above that line, that's what we call a spike. It's a clear signal that something unusual is going on.
But a little spike? That's just the start. What we are really hunting for is conviction. That's where we see volume that isn't just a little above average, but massively above. We're talking 8 to 10 times the normal daily volume. Now, that's not just random noise. That's a huge signal of major institutional interest. That, my friends, is the footprint of big money.
And you can set this up on your own charting platform in like 30 seconds. It's incredibly easy. First, just add the volume indicator. Then open its settings, find the volume MA or moving average, check the box, and set the length to 20. Bam! In just a few clicks, you've got your baseline for spotting unusual activity.
All right, so we've got our core concept down. Find conviction in the volume. Now, let's build the actual engine that's going to do all the heavy lifting for us. This is the exact blueprint for our momentum scanner.
This blueprint has 6 inclusion filters and 1 really key exclusion filter. And trust me, each one has a very specific job to do in narrowing down that whole universe of stocks to just a small high-potential list.
Okay, let's break this down, because the why behind each filter is what's important. First, the volume filters. It has to be above the 20-day average and over 50,000 shares. That gives us unusual participation and liquidity. Next, quality and momentum. Price over $100 to avoid the crazy penny stocks, and up at least 1% to make sure it's buying, not selling. We also want it above the 50-day average just to confirm the medium-term trend is healthy. And finally, 2 crucial removals. We kick out ETFs, and we use a special filter for F&O stocks, which we'll get to right now.
Now, I really want to zoom in on that F&O filter because this one is a game changer. F&O just stands for futures and options. See, stocks with a big derivatives market can have their prices get all weird because of things like hedging or complex options trades. By setting the F&O lot size to 0, we filter all those stocks out. This helps us focus only on moves driven by pure organic demand in the regular cash market.
And this slide right here perfectly shows why every one of these little details matters. Take a look. Without that % change greater than 1 filter, our scanner might have flagged FedBank. Yeah, it had huge volume, but it was down almost 10%. That is a massive red flag. That's aggressive selling. By adding that one simple filter, we make sure our lift only shows us stocks where high volume means aggressive buying.
Okay, so you've run the scanner, you've got your filtered list, but we're not done yet. Running the scanner is just step 1. This output is not a buy list, okay? It's a list of candidates that have earned a closer look. This is where we shift gears from data into actual analysis.
So let's look at a stock our scanner might find. A perfect example, AWHCL. The chart is telling a pretty cool story here. You can see it's breaking out of a long downtrend. That old price ceiling, what we call resistance, is now acting as a new floor, or support. We're seeing clear signs of accumulation. That means steady buying. And it even looks like it might be forming a bullish reversal pattern. See? It's this combination of signals that turns a name on a list into a real actionable trading idea.
Now, sometimes our scanner will dig up a stock that has already made an absolutely incredible move, like, say, 1,500%. So that begs the question, is this an opportunity or is it a trap?
And this brings us to a really critical rule of risk management. When a stock has already gone vertical like that, the risk for a new entry is just way too high. As the quote says, the location is no longer feasible. Chasing a rocket that's already left the atmosphere is a very dangerous game. Our scanner is designed to find stocks at the beginning of a move, not at the very end.
Okay, so we've got the concept, we've built the tool, and we have a framework for analysis. Let's put it all together now into a simple, repeatable workflow that you can actually use every single day. You know, the most important takeaway from this whole thing is this simple 4-step process. Number 1, run the scanner, get your list. Number 2, create a focused watch list from those results. Number 3, analyze the charts, look for structure, for patterns. And finally, number 4, identify only the absolute A-plus setups that fit your personal rules. This systematic approach is what separates disciplined trading from just gambling.
And all of this leaves us with one final question. A question for you. The whole point here was to give you a blueprint to build a system. Because at the end of the day, in the market, you can either get lost chasing all the random noise, or you can build a machine to find the signal. The choice is yours.